Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish closing long white Marobozo and second bullish white soldier after the previous session's bullish opening long white Marobozo. This continued the reactionary theme against last week's weekly key reversal, down. Prices utilized a significant bright red neckline, currently at 104.68, of the small and narrow November to December 2024 reverse head and shoulders continuation pattern as a base for the move higher. Indeed, if the market had a topside target for this reverse head and shoulders pattern, which it does not qualify for, I hasten to add, well, if it had, well, then the market would have reached it. Prices punched up and closed over the combined February and March 2017 low at 104.92, the MOVE medium moving average currently 105.04, the April 2017 low at 105.68, finally halting just ahead of the 2020 low at 106.36. So far today, well, prices pushing up through the 2020 low and now testing the twin resistances overhead of the flatlining gold long moving average, currently 107.20, and the April 2020 low at 107.25. Cable, AK sterling against the US dollar. A bullish closing white Marobozo and second bullish white soldier yesterday after the previous session's bullish long white Marobozo. This continued the reactionary theme against last week's weekly key reversal, down. Prices significantly carried on their rise from the previously mentioned dark blue mid-January to mid-February ascending wedge pattern, which is currently 124.63 to 126.36, as well as closing over the important pair of 50% Fibonacci lines, and that's of the June 2016 to September 2022 move at 126.99 and the October 23 to September 24 move at 127.34, even pushing and closing over the flatlining gold long moving average, currently at 127.85 where we finished up. Overall, I'll continue to maintain the topside primary target X at 129.15 and the secondary harder to reach target X1 at 131 even for a breakout from this dark blue ascending wedge pattern. And so far today, a push higher up towards the last noted resistance before target X at 129.15, and that's the November 2020 low at 128.52. Right now this is still resistance. US dollar against the Japanese yen. A hammer pattern yesterday, traditionally seen as a bullish reversal pattern, which data indicates it does about 6 out of 10 times. But the data also indicates that when it does not rally that far. This is after the previous session's reactionary key reversal down. Overhead we still have the dark blue lower bull channel line, currently at 151.72, of the breached mid-November 2024 to late February 2025 possible shallow bull channel. Now, as many of you are aware, I have misgivings about this possible bull channel, as we haven't touched the channel's sides, the lines, enough times in my mind to qualify as such. So I have not placed any targets below for it as yet. Anyway, the hammer pattern closed back up over the 50% Fibonacci line of the July 23 to July 24 move at 149.61, if only just. Whilst over here we still have the 50% Fibonacci line for the whole of the 2024 move at 150.76. Now, not far below we have the lesser Fibonacci line at 148.68, which supported the market but was penetrated yesterday, though prices did not stay below the support long enough, halting at the lesser Fibonacci line at 148.11. Indeed, as I've mentioned on a number of occasions previously, this region was the low back in early December last year and was the only obstacle left from the market forming an early December 2024 to date rounded top pattern. We have now formed that rounded top, but we've chosen for now not to exploit it on the downside. Now, so far today, prices have dipped back down below the 50% Fibonacci line at 149.61, though not by far. US dollar against the CNH, the offshore Chinese yuan. A strong reactionary bearish long black Marobozo yesterday after the previous session's immediate countering bullish double. What is more, it was a strong reactionary move lower to last week's weekly key reversal up. The prices punched back down and closed below the flatlining green short medium moving average, currently at 729.79. the breached bright green upper tine, currently at 728.95 of the late December 2024 to late January 2025 bearish Andrews pitchfork. The rising medium moving average, mauve medium moving average, currently at 726.18, and the influential dark blue upper trend line, currently at 725.52 of the January to March 2024 ascending triangle pattern. Below, we next have the flatlining gold long moving average, currently at 722.08. Overall, there is still the possibility, though I personally doubt it right now, of looking at the whole late November 2024 to date action as a possible double top, even Adam type. Now, so far today, a reactionary pull back upwards over the dark blue upper trend line and the mauve medium moving average, but then reverting back down to sit in between these two right now. US dollar against the Brazilian real. A third bullish white soldier on Friday and a follow-on higher to the previous session's bullish closing white Mariposa, an earlier immediate countering key reversal up. Prices pushed up over the March 2021 high at 588.04, as well as the slowly rising mauve medium moving average, currently 590.51, and the mid-December 2024 to date downtrend, currently at 588.23. However, the market only managed to close over the March 2021 high. I have some doubts about the downtrend, as it is only a 2-pointer, and those points are fairly close together. Overhead, we now have the declining green short medium moving average, currently at 594.53, and the May 2022 high of 597.08. Now, looking below, and we still have the combination of the rising gold long moving average, currently 570.88, and the bright red breached but seemingly repaired May 2024 to date uptrend, currently at 576.47. This combination had been guiding prices higher since the middle of last year. I have also, for the moment, still left target X in the 563.35 zone and the secondary target X1 down in the 541.95 zone on my daily chart. These are the primary and secondary targets for the drop down from the very large October 24 to mid-January 25 rising expanding wedge pattern, though I am now starting to have doubts or thoughts, actually having thoughts about retiring them. As a final item, it should be noted that the rising mauve medium moving average and the March 2021 high both now just above the market. Well, neither of them were much use as supports on the market's way down, so I'm wondering if they will be any good as resistances on the way up. US dollar against the Mexican peso. An immediate countering bearish harami yesterday after the previous session's unusual key reversal up. Prices reached up as far as the 50% Fibonacci line, the April 20 to April 2024 move at 20.9990. That's actually part of the 20.9990 to 21.0501 congestion area. And they've reached as low as the green flatlining short medium moving average below, currently at 20.4767, before finishing on the September 2022 high at 20.5765. Overall, prices are still within the very gently rising bright red early November 2024 to date bull channel. It's currently 20.2451 to 21.0451. This bright red shallow bull channel has been the driving pattern here since last year. Now, so far today, a move lower below the September 2020 low and towards testing the green short medium moving average.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.